We got to talk about the housing market today because it's becoming almost impossible for millennials and Gen Zs to own a home. With very little inventory, lots of competition, and with interest rates at historic highs, it's making it too expensive for most to afford. So with that, I want to comment on a video why buying a house is so hard right now and give you my thoughts on it on a poor blue-collar millennial boy who's bought over 150 properties and became a self-made millionaire in real estate. I've got a lot of experience in this area and I want to help people become wealthy and live life on their terms. So let's get into it. Now, just like in the video, there's this basic premise that real estate always goes up over time. And this isn't always true, especially for secondary and rural markets. So these type of kind of secondary markets do really well in the boom time because investors want to go buy properties there because houses are cheaper, cash flow is so much higher, and that's what really draws people to either live there or to invest there. But what do we just see right now with the real estate recession? These markets are the first to get absolutely obliterated and lose a lot of value. For example, I'm a Canadian and I invest and live about an hour outside of Toronto. So for Canada, this is a pretty big city and it's got all the fundamentals. It's got GDP growth, it's got a ton of population growth, it's got a ton of amenities, it's got things going for it. People want to live here. So in this past real estate recession, values dropped maybe 20% in certain neighborhoods, more so around 15%. Now you have these smaller cities that are, yes, more affordable, but nobody lives there. Nobody really wants to live there unless they kind of have to. There's no jobs, there's no population growth, there's nothing going on for it. And those areas have lost about 30 to 40% of their value in this last real estate recession. Now, if you're a homeowner, that really sucks. If you're an investor, you could go bankrupt. See, the bigger cities where all the jobs are, where all the amenities are, where everybody wants to live, those are more stable. And those are the areas that I like to live in, ideally, or especially invest in. For our philosophy, we're never, ever investing in these smaller towns. I was against it when I started in 2010, and this last recession just proves it. Because a lot of big real estate investors that I know who got a little greedy, a little too saucy during the pandemic run-up, left these more expensive cities because nothing really cash flowed. It was hard to find a deal for these secondary markets. And they're all posting on social media now about, oh my God, values have dropped 40%. Now they don't cash flow. Everybody's leaving because there's no jobs. Now I'm stuck with this property. Terrible. Now, even for these bigger cities, it doesn't mean that real estate's always going to go up every single year. There's going to be pullbacks along the way. Things are going to happen. Big companies are going to leave town. There's going to be an economic recession. Things are going to happen. But over the long term, these bigger cities tend on a chart to always go up. Now, over the last 30 years, a lot of people aren't talking about this phenomenon either, which is what's really held up real estate prices, especially in Canada, is the population growth over the past 30 years has been insane. I mean, the millennial generation, my generation, is the biggest generation in a long time, all coming of age at the exact same time, wanting to buy homes. Now, if you throw on top of that a ton of immigration, which again is what we're seeing in Canada, 500,000 immigrants per year in a country the size of only 40 million, that's insane. So when you have that many people all wanting to buy homes and we have the lowest inventory in years, actually decades, this is a perfect recipe for prices to go insane, which is exactly what we saw during the pandemic. But this has been going on long before the pandemic. All that stimulus money just kind of emphasized what was already going on. Now, will this trend continue of all of these people wanting to buy homes at the exact same time? Time will tell. But one thing to note is that millennials are having less kids than their boomer parents, and Gen Zs are expected to have even less kids than millennials are. It's just the way the trend is going. Why? Mostly because life is so damn expensive and people are realizing how expensive kids are, which I can admit to you, they cost a lot. So maybe balance will return at some point with less and less people being made wanting to buy homes. Maybe supply and demand will come back into balance someday. Now, the next thing to take a look at is real estate prices are growing way faster than people can keep up with their wages. And this is caused by a lovely thing called inflation. Now, if you're an asset holder, a real estate investor in this case, inflation is really your best friend. But if you're the average Joe trying to get ahead, trying to work and save up money to buy a home, man, inflation is working against you like crazy. This is because inflation is growing faster than your 3 to 5% yearly raise. I mean, if the real inflation rate is closer to 8 to 10%, let's be honest, for literally like the past 30 years, and you're only getting a 3 to 5% wage increase, now that's just economic inflation. Real estate inflation can be a lot more than that on a yearly basis. I mean, in the year of like 2022 alone, most houses appreciated 20 to 30%. That's like 8 to 10 years worth of normal appreciation all in 1 year. Now, one thing you have to understand is that hard assets always go with inflation or above inflation, whereas your wage at your job maybe won't. And this is why it's so important to hold hard assets like gold, kind of stocks, but real estate especially is one of the best investments of all time. You've heard it before. The majority of millionaires have done so through real estate. Why? Because everybody friggin' needs a home. There's no getting around it. There's no negotiating. Everybody needs a roof over their head. Everybody needs to stay out of the cold. Everybody, pretty much, needs a shower. You get the point. Everybody needs a home no matter what. It's literally life or death. Now, the reason we've had so much inflation over the past 30 to 50 years is honestly because we came off of the gold standard in the 70s. Now, prior to that, US dollars were tied to gold, so it had real value. But when the Federal Reserve decided to detach from gold and just print money kind of out of thin air, that's what's drawn asset prices so high. Before that, real estate was pretty boring and simple. 3 to 5% appreciation every year, very boring. After that, it's honestly closer to 5 to 10% every single year, some years even more than that. And that's because the government is printing money, devaluing the dollar. Therefore, it takes more dollars to buy quality things like real estate, like cars, like watches, whatever. So the price of those things become more expensive. Thus inflation, thus asset price increase. Now, on top of that, if you throw on restrictions and permits and development charges, which make it so hard to build, make it more expensive for builders and investors to bring more properties online, that's again lowering the supply, thus increasing the value. Supply and demand, economics 101. If we have extremely high demand but low supply, these people are going to fight over the little supply there is. If we were to somehow raise the supply closer to demand, we would have a more easy, boring market. Think of 2008. In America, the metrics were the opposite. We had very low demand and a ton of supply because everybody was trying to offload their house before they went bankrupt or they went bankrupt. Well, now we have the exact opposite problem of that. And with the socioeconomic metrics I discussed about low birth rates, lower population, less houses, that problem isn't really going to fix itself, honestly, that I can see for decades and decades to come. Now, am I saying we're not going to have another 2008 real estate crash for decades and decades to come? Anything can happen. Any black swan event can happen. But the way things are looking, I just don't see how it's even possible. I mean, we just raised interest rates to the highest level ever. The highest and the fastest level ever. And real estate prices have held on way better than most economists could even predict. And that is because of supply and demand metrics. They could raise interest rates 2 more percent, 3 more percent. Yeah, prices will come down a little bit, but not nearly as much as you would think. The jig is up. People are holding on to their houses and they're not selling in this high interest rate environment, thus lowering supply even more. So what's the solution? This channel is all about solutions, and the easiest root problem is we need more houses. We need more houses built. Now, in the US, this is much less a problem than many countries around the world, especially Canada and Australia and England. There's something common there. That was a pun joke because they're Commonwealth nations. These countries have so many restrictions. It costs so much to build a house. So the private sector, real estate investors like me, builders like me, don't really want to build in these nations. It's impossible. It costs too much. It's too risky. The profit margin is so tiny. Why would I do that? In the US, restrictions are much less. Permits cost less. They get spit out faster. Development charges are way less than countries like Canada or Australia. So there's more incentive for the private sector to come in, build houses, buy up properties, turn them into rental properties. There's more incentive. Lower taxes, they can make more money. It's easier and faster. Of course, money flows to wherever it's easiest, just like water. And now that this problem is being exacerbated so much in places like Canada and Australia, whatever, investors from those countries are leaving those countries and coming to the US, which is absolutely insane. Now we are losing talent, we're losing real estate investors, and they're all going to places like the US. myself included. I had 150 properties in Canada, sold them all. Now I'm taking my partners down to the US and we're doing it all over again. We're buying quality single family properties in good quality states, in good quality cities, and holding them for 5 years, selling them, making a profit, and doing it again and again and again. The exact same thing I did in Canada to become a self-made multi-millionaire. And I wish I could stay in Canada and do it all over again, but it makes no sense. Prices are so high, interest rates are high, nothing cash flows. That's the fundamental step one of investing, is your asset must at least cash flow to carry itself. Well, there is no such thing as cash flow in Canada when it comes to single family real estate, which is my favorite strategy. Now, the last reason that's making housing so unaffordable is that interest rates are so low for those who locked in pre-pandemic or during the beginning of the pandemic. Now, this is a unique problem to the US, where when you buy a property, you get a true 30-year locked-in mortgage. You don't have to renew or get a new mortgage for 30 years. So if people locked in at rates around 1%, 2%, 3%, they have that mortgage locked in for 30 years. So they're not worried about interest rate cuts. They're just living their life right now, having a great time. So a lot of these sellers that would normally sell every 5 years to kind of keep up with the Joneses, which is the average hold time for a primary home, they're looking at the world right now and going, why the hell would I sell my house now when I have a 3% rate and go buy what? For way more money and get a 7% interest rate? That makes no sense. I'm just going to chill here, maybe a little longer, 2 more years, 3 more years. And when rates come down to more realistic levels, maybe then I'll move. But right now, I ain't moving, which is why supply is so low in America even more. Now in Canada, we have a crooked financial system and your mortgage turns over every single 5 years. Yes, you have a 30-year amortization mortgage, but it renews every 5 years for most people. So yeah, maybe you also locked in a good rate of 2%, 3% in 2021, but that mortgage is coming due pretty soon, and now you're gonna have to renew at a 7% interest rate on a crazy high asset that you probably bought during the pandemic. That is a recipe for disaster. But if you watch this channel and you know that we dig into the data and what's coming for interest rates, okay, these rates aren't going to be much higher. Okay, these rates aren't going to be that high in 2025 and especially 2026. They're getting slashed soon. The economy is being backed into a corner and the feds are going to have no choice but to cut rates and cut heavy. But that is for other videos that I've made. Check those out. So what do you guys think? Let me know in the comments below. Are you looking to buy a home? Is it impossible for you to qualify to pay for these mortgages? Are you seeing other people put off their dream of home ownership? Let me know in the comments below. I will see you in the next video, and don't forget to smash that subscribe button for more videos like this.